Filing bankruptcy is supposed to be your last resort option, the very last financial tool you want to use. But is there a situation where filing Chapter 7 bankruptcy is actually your best choice? In this video, we'll look at what happens when you file bankruptcy and how to know when it's time. We're talking when to file bankruptcy today on Let's Talk Money. Hey Bowtie Nation, Joseph Hogue here, and I wanted to do this video today because we could be about to see a surge of bankruptcies across the United States. More than 30 million people are unemployed, 1 in 10 Americans, more than the entire population of Texas, and that extra $600 in weekly unemployment benefits, that's going to run out in July 31st, leaving a lot of people with no other option. Now I want to make this video a complete guide to filing bankruptcy, from the pros and the cons to other options, because that depression we could be in for, you can bet the fraudsters and the scammers are going to be out there to take advantage of anyone that's down and out. That's why I contacted Upsolve to partner for this series of videos. Now, Upsolve is America's largest bankruptcy nonprofit. The app helps you file bankruptcy without a lawyer and has helped users clear over $206 million since 2016. Now we'll look at other options like debt settlement and consolidation, but a lot of these companies are anything but nonprofit. Upsolve receives 80% of its funding from federal grants and philanthropic charities, and I'll show you later how you can use it to save thousands on your own bankruptcy costs. So I first want to cover some of the basics here, a quick definition of what's Chapter 7 and Chapter 13 bankruptcy, and then some of the other options that you might try before you get to that point. We'll look at the pros and cons as well as 3 scenarios to give you an idea of when filing bankruptcy might actually be your best option. I'll leave a clickable index in the description below if you want to jump over this basic stuff, but make sure you stick around for that information because this could mean the difference between getting stuck or getting out of debt for good. I'll also leave a link to Upsolve in the description, and we'll be looking at how to use that app and how much it can save you on bankruptcy costs in our next 2 videos. Now at its most basic, bankruptcy is just a legal process to relieve overwhelming debt on a person or a company. You file with the court, and someone is assigned to look over your finances to determine how much of your debt is wiped clean. This is a chance to start over when there's no other option. And the reasoning here comes from the old days where if you couldn't pay your debts, you went to debtor's prison. Families were split up and you were basically made a slave. We're talking real life Oliver Twist stuff. So to give people a way out, bankruptcy was created as a solution when there was just no other option. And there's actually 2 types of bankruptcy here for individuals, Chapter 7 and then Chapter 13. Now, Chapter 7 bankruptcy is the one most people think about. This is when you file to have your debts wiped clean completely. This is when you don't make enough money to reasonably keep up with those payments and you don't have a lot of property you can sell. Debts that can be discharged or relieved in a Chapter 7 bankruptcy include credit card debt, medical bills, personal loans, past due utility bills, even debts already sent to a collection agency. Understand that not all debt can be relieved in a bankruptcy though. Child support and alimony, and any debt on your home or a car that won't be forgiven if you're going to be keeping that property. Student loans can be discharged, but it's very rare. Chapter 13 bankruptcy, and this is also called a wage earner's plan. This is for people that make too much to file that Chapter 7, usually around the median household income in your area, or that have too many assets that they don't want to lose. In Chapter 13 bankruptcy, the court is going to make a plan for you to pay off your debt over 3 to 5 years. Now you might also be able to get some of your debt relieved or forgiven to a level that you can repay this, and then you get to keep all of your property as well. Of course, the pros of filing bankruptcy are that immediate relief from the debt, from the constant collection agency calls and that fresh start that you need. When you file bankruptcy, even before it's finished, all your creditors have to stop harassing you immediately in what's called an automatic stay. During the bankruptcy, you can't be evicted from your home and it can't be foreclosed. Your utilities can't be turned off for non-payment, and some people with really bad credit scores even see their credit score start increasing soon after the bankruptcy. Nation, as we say here on Let's Talk Money though, it's not all rainbows and unicorns. That bankruptcy is going to stay on your credit report for up to 10 years, making it difficult to get a mortgage or any of those big loans for 3 to 5 years at least. You won't be able to file bankruptcy again for at least 8 years, and you could lose some of your assets like that second home or cars in that Chapter 7. Also, anyone that co-signed for a loan that you discharged in bankruptcy, they're on the hook now for that money. Then there's the average cost to file bankruptcy. That's between $1,500 up to $4,000, with lawyers' fees starting in the thousands. That cost is part of the reason why I wanted to do this series with Upsolve. The app is totally free to use and lowers the cost of filing bankruptcy to a few $100s versus the thousands you'll pay using a lawyer. So that's really the basics of bankruptcy, and we'll get to those scenarios of when to file, but I don't want you to think this is your only option. There are bankruptcy alternatives available, and they have their own pros and cons each. Now your first option here is debt settlement, and I'm not talking about the debt settlement companies here. Yes, there are companies out there that offer to negotiate your credit cards and other creditors, hoping to settle on paying less than you owe. It sounds like a great deal, but there are a lot of hidden dangers and huge fees with these companies. Now, they're going to first tell you to stop paying your bills, so that gives them negotiating leverage over your creditors. This is going to absolutely destroy your credit worse than it already was, and it's going to go on for a year or two while you're paying that debt settlement company thousands in fees. Instead, I'm talking about just a do-it-yourself settlement plan where you call up your creditors one by one and just try to work out some kind of a manageable payment plan. You might be able to get your debt reduced a little bit if you pay the rest off in a lump sum, or they might just put you on a longer-term plan that you can actually afford. Now, if that doesn't work, though, there's also debt consolidation. Now, this is where you take out one big loan to pay off a lot of your other high-interest debt. This might be something like a signature loan from your bank or maybe a personal loan online. The idea here is that if you can get a lower rate than your credit card or other high-interest debt, the money you save in interest helps to pay off that consolidation loan, or you just get a longer term that lowers your monthly payments. Of course, the problem here is that you're not doing anything to actually lower your debt. You're just moving it around from one creditor to another. And it's likely that if you're so far in debt, then your credit score isn't too great, and you're probably still looking at those double-digit interest rates even on a consolidation loan. Now, the final bankruptcy alternative that we'll look at before deciding when to file is credit counseling. And this is actually a really good place to start because it's going to explore all those other options, and you're going to need to take this short online credit counseling course anyway before you file bankruptcy. Now, the credit counseling course takes less than an hour to do, and Upsolve can actually show you how to get a waiver on the fee. Your financial counselor is going to look at your situation. They'll explain things like debt negotiation, debt management, and bankruptcy itself. So we know what bankruptcy is and your alternatives, but when do you know if you should file? When is it time to start looking at bankruptcy as your best option? So of course, one way is just to speak with that credit counselor, and you'll need to do this anyway if you end up filing. But I want to lay out 3 scenarios with some of the points when you might or might not want to declare bankruptcy. Scenario 1. Let's say Andy's been out of work for months and has maxed out his credit cards. He's got 20 grand in credit card debt and another 5,000 in other loans. Now, his credit score has already taken a huge hit. It's under 600 FICO because of those missed payments. The only way Andy is able to keep up on his debt payments is by taking on more debt, and it's all high interest because of that credit score. The calls from collectors are driving him crazy, and he just feels trapped. So I think it's obvious here. Andy needs a way out. He's got more than $10,000 in dischargeable debt that he's unable to pay. Keeping up with that debt is causing him a lot of stress, and his credit score is already destroyed from the experience. Now, this is the textbook case of when most people decide to file bankruptcy. Our next scenario here is Janelle. Now, Janelle has actually gotten back to work, but those bills really piled up while she was out of a job. She has some assets, like a car in her home, but her debts have mushroomed. Keeping up with her monthly payments is only possible by scraping the bottom of the barrel, and it's going to take 6 years to pay them all off. Janelle might not be as bad off as Andy, but bankruptcy might still be something to consider. Even if you're barely able to stay on top of your monthly payments, if it means living on nothing for more than 5 years, that's more than anyone should have to go through. Having some assets like a house or a car doesn't immediately disqualify you from filing bankruptcy either. In fact, in a 2019 study by the American Bankruptcy Institute on 488,000 bankruptcy filers had an average of over $237,000 in debt and $171,000 in assets. The key here isn't whether you have that debt or assets, but that the debt you owe is more than the value of your assets. Our third scenario here, and let's look at a situation where bankruptcy might not be your best option. So meet Roger. Now, Roger knows how bankruptcy can help because he's filed before and gotten his debts discharged about 5 years ago. He still owes quite a bit in student loans and some back child support though, and would like to see that wiped out. The problem is he's also got some rental property and a few cars that he doesn't want to lose. Now, Roger wouldn't be able to file anyway because it's been less than 8 years since his last bankruptcy discharge. Even if he could though, that student loan debt and the domestic support is non-dischargeable anyway, so he's not getting out without paying that. The trustee's also probably going to be looking at taking those rental properties and all but one car to help pay down those debts. Bankruptcy isn't a last resort, and it's not the nuclear option that most people think. And check out that link to Upsolve in the video description below to learn more and how to save on filing bankruptcy without a lawyer.